please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. For the markets, the benchmark indices are still down about 0.2%. The pressure in the mid-caps continue. The index is down about 1%. And the advanced decline ratio in favor of the declining side, but the gap continues to widen. But let's move on then to the top story that we're tracking. The government has hiked the customs duty on washing machines, on air conditioners, refrigerators and compressors. Now, this move is seen positive for companies like Dixon Technology as well as Amber Enterprises, who manufacture locally. To talk more about this particular theme, we're now joined by Mr. Jasbir Singh, the CEO of Amber. Good morning, Mr. Singh, and thanks so much for joining in. If you could first tell us, for your company, how do you assess the benefit?
It's a very positive move by Government of India to support Make in India.
Yeah.
And since we are the most backward integrated comprehensive solution provider in the industry, it's definitely going to be very positive for us.
Any numbers you can help us with on how much?
Sorry?
Any numbers you can help us with in terms of the benefit?
It will be very difficult to actually, come out with any number here, because it has been increased from 10 to 20%, and there's almost about 26 to 27% of air conditioners are being imported, which will actually, now being transferred to localized manufacturing.
Okay.
And Amber is a company which delivers solutions in complete finished goods as well as the functional component space.
Okay.
So whatever comes to India, whether it is in-source manufacturing by brand or whether it is an outsourced portion, Amber is definitely going to benefit from all that.
So as a percentage of the market, imports contribute to more than 25 to 27% is what you're trying to tell us of the AC market.
Yeah, so there are three categories which are actually imported. Window air conditioners is imported in a very small volumes to about 3 to 4%, and then outdoor unit of split is also imported in the same range of 4 to 5%.
Okay.
Indoor is one which is imported in high volumes. So all these indoors will now start being manufactured in India.
So 4 to 5% of
which will be very positive for Amber. So indoor is right now about 35%, which is imported.
Okay.
Okay. So you're saying from 35% you're expecting it to come down drastically.
Yes, that's right.
All right. And the industry as the whole, what would be the percentage as a blended number?
As a whole, in terms of units, you will see it should be about 24 to 25.
24 to 25%.
Okay. If you could also tell us which players, since you cater to so many players, Indian as well as foreign, which companies or players have the most exposure to imports? Is it a
Well, I would not like to comment on this because they're all our customers, and it depends on the strategy. So some brands are manufacturing here and some are even localizing here. So, I would like to refrain my comments on the same way that which brands are doing what. But in a way, I think all the brands were expecting this move from Government of India for Make in India drive, and industry is taking it very positively on an overall basis.
Okay, Mr. Singh, let's try again now. You were saying that you're a backward integrated player, you're the ODM player, OEM player as well. What about the compressors? Do you import it or do you manufacture it in-house? Do you source it domestically?
No, so we source it domestically also, and we import it also. But largely, compressor is a pass-through component for us because it is supplied by the customers.
Okay,
and there's only 2.5% import duty hike in compressors, which is very negligible on the basic cost of a compressor.
Right. So let's take that point forward then. Compressors, they constitute nearly around 30%, I think, of the total cost of an air conditioner, right? So
that's right.
And as you're telling us, is that you source some from imported, some from the domestic market. If you could get a rough percentage, is it 50-50%?
No. It is actually in India. There's a company called Highly which manufactures compressors, rotary compressors.
Okay.
So it's about 70-30 right now.
For you, it is 70-30. For you.
Yeah.
So on the 30%, you'll have to spend extra 2.5%, right?
No. On the 70%.
So you're importing 70% of your compressor.
So complete industry size is 70 is being imported, 30 is localized.
Okay. And
right?
for you?
For you, yeah.
For us, it doesn't. So we don't directly import. This is a component which is supplied by the customers largely.
Okay.
So
you're
it's
only
not an import
importing
component for us.
Okay, you're only importing on behalf of the clients. If there is an increase, you'll directly pass it on.
That's right. So it's negligible. It's zero impact for us.
Okay. Also, if you could tell us that this clearly opens up opportunities for a company like Amber Enterprises or other Indian companies who can manufacture. Would you look to increase your prices and therefore benefit your margins? Because there is clearly a price differential now between importing or using the services of a company like Amber Enterprises.
No, I think it's not a right way to increase the margins. But what we would like to offer is the more comprehensive solutions to the industry with a wider product range, which was not being manufactured by us, and now it will be manufactured because of import substitution will happen.
Okay. So you're saying
we would rather like to increase our wallet share within the existing customers.
Okay, so your market share is already 55%, right?
Of the outsourced place, yes.
Of the outdoor. Okay.
Of the outsourced space.
Of the outsourced. And how much can it increase by? Are you targeting? What are you targeting?
So, we have always outnumbered the industry in terms of volumes from last 7 years. Last 7 years, industry's CAGR was 11%. We have done about 23-24% in volumes.
Right.
So, if we continue to do so, we will keep on increasing our share of business.
Okay. Mr. Singh, the last time you joined us, you gave us two numbers. One is that your revenue growth for FY19 will be 25%. The second factor that you told us was that your current capacity utilization is in that range of around 50 to around 55%. Because of this boost that is coming in there, and we started off the conversation by you telling us that it's a very good sign for your company and for the industry on the whole. So will you want to up those numbers? 25% revenue growth. Can you do now, you believe, around 30% revenue growth? And your capacity utilization levels, will they increase from here? Go ahead.
No, I think, the way industry works is everybody is sitting with some inventories today. And, any impact on this kind of custom duty increase will be actually visible in Q4 or maybe Q1 of next year, because everybody has plans over. So this year we will retain the same kind of growth and the margins. But next year, definitely, we will look forward for a very robust growth.
What are the margins? I didn't get that number. Top line growth of 25%, you're telling us. Capacity utilization of 55% for FY19. But margins?
That's right. So margins, I think we are looking towards almost in the same range what we delivered last year.
Okay. So margins will be maintained. Thank you, Mr. Singh, for joining in. So not quantifying the benefit, but just saying that they will use this opportunity to increase their market share or wallet share amongst their clients. Slip into a break. Then on that note, on the other side, we'll get a check on the market technicals with Ashwini Gujral and Rajat Bose. Stay tuned.
Welcome back. Then a bit of a pullback is what we're seeing. Some of these OMCs are bouncing up in trade. HPCL has jumped up. It's up, I think, close to around 1%, and most of that move has come in the last few minutes. But there are stocks that are slipping from the broader markets as well. Infosys, I think, is weighing down on the index. It was up close to around 1.5%. And when Infosys takes a leg down, then it's not very, very good news. And even Titan, actually, the stock was holding with a gain of close to around 3%. Now it's up less than 2%. So it shaved off some gains, some profit booking being seen out there. And the IT index on the whole, actually, a couple of those stocks in there that have come in for some profit booking. So keep an eye out on that front as well. A bit of a downtick is what we've seen in the last few minutes. But how do you trade the Nifty from here? We're down 30 points. Ashwini Gujral as well as Rajat Bose join in on this expiry day. Good day, gentlemen. Thanks so much for joining in. Ashwini, coming across to you. What's the trade on the Nifty? 11,020. Are we likely to move lower? As the series hasn't been great for the bulls, we're down 600 points.
See, in my view, the market is extremely weak. And, I would bet on 11,000 breaking. Now, I know it's expiry and last hour move, etc., etc. But I think you still need some confidence to engineer that also. So I'm getting short on Bank Nifty right now. And I think given the way, there's been a sell-off on financials, crude is at 82.24. You have hardly a rupee holding on to about 72, 65, 68. I think the market is looking weak, and once the sell-off resumes, we will take out the intraday low and possibly head towards the 10,900, 950 zone. Similarly, Bank Nifty below 25,000 could pick up steam. But as they say, anything can happen on expiry. But personally, I believe hardly, I think maybe State Bank is the only financial stock which is higher. So this sort of setup, extremely difficult to see any last minute miracle happening. So for the moment, Apollo Hospital is a buy with a stop of 1055, target of 1100. Reliance Capital is a sell with a stop of 306, target of 288. And ONGC is a sell with a stop of 182, target of 170.
Yes, deep cuts seen in the entire financial space, a space Ashwini has been recommending to go short since morning. Ashri Infra is now down 13%, fresh 52-week low on that. Canfin Homes has slipped about 6.5%. Let's invite Rajat Bose into the discussion as well. Rajat, are you expecting more weakness as the day progresses and we hit expiry?
See, if 11,000 level is taken out by the Nifty, then those puts that got sold yesterday as well as early part of the day, that there could be some liquidation because of that, and then 10,967 to about 10,913 would be the key levels to watch out for. And on the upside, 11,050 to about 11,075 would now act as a strong resistance. I am not expecting it is to that the Nifty would be closing above 11,100. Having said that, I have also chosen Apollo Hospital. My stop loss is below 1,059, and 1,082 and 1,089 are the two targets for Apollo Hospitals. And NIIT take is a sell. Take as it is looks weak to me now. 1153 above should be your stop loss, and 1113 and 1,089 would be the two targets for NIIT take sell position.
Okay, all right. Thanks so much for that, Ashwini, as well as Rajat, for joining in and giving us your trades. Well, they said the market's looking jittery, and in the last few minutes, we've taken a leg down for sure. We're moving towards that 11,000 odd mark. Titans, a stock that our ticker team is telling us, has come off the high point of the day. It's seen some profit booking from the top, but the problem pocket really has been some of these banking stocks. Yes Bank is lower in today's trading session. You have Axis Bank as well that's slipping, and Bajaj Finance from the financials that have seen some selling pressure. When that takes a leg down, then definitely, in fact, it's not just about the weightage on the index. Now it's about the market mood. When you see stocks like DHFL moving lower, you see Yes Bank moving lower, and then in fact we have the whole host of these financials and banking stocks that do see some selling. The breadth of the market as it is firmly in favor of the declines. So we have close to around 2 stocks that are declining for every 1 stock that's advancing. Yesterday we had those European markets. They ended flattish or with some mild gains. Let's see how they're opening up. Remember, overnight we did have those markets that they have to react to the Fed rate hike and also the commentary that came in from the Fed. And on the back of that, I think there's a bit of a leg down. So the CAC, FTSE and DAX, all three of them opening up the cut off around 0.2% to around 0.4%. But let's slip into a short break. On the other side, we'll get chatting with the Telecom Secretary. Stay with us.